Like and subscribe to my channel and click the bell icon to get new video updates.
Rentals reverse course in February, climbing for the first time in 5 months. Quoted rents rose $6, or 0.3%, from January to February. That is the first monthly rise in rents in 5 months since they last rose in September 2022, according to a recent survey. The 0.3% increase is only slightly lower than the typical February increase of 0.4%, averaged across data from 2016 to 2020, suggesting the rental market remains slightly cooler than normal. Typical asking rents nationally are now $1,976, i.e. 6.3% up from a year ago, but 0.5% below the peak of $1,987, observed in September 2022. Monthly changes. Winter is coming to Florida. This bucks the recent trend that mainly western cities like New Orleans started this year. Winters saw the largest rent declines. The significant decline observed in 2 of Florida's major metropolitan areas suggests that after years of very rapid rental growth, rents are finally growing. Some cooling could occur. Monthly rent increases were highest in Hartford, Sacramento, Chicago, New Orleans and Raleigh. Western markets. Exiting the rollercoaster rents are very close to where they were last February in several western inland markets. Year over year, rents in Las Vegas are down 1.0%, and are up only slightly in Phoenix, New Orleans, Sacramento and Baltimore. Annual rental growth hasn't declined much further in these markets from January. Western markets may take a lull following breakneck rental growth in 2021, as they witnessed a major exodus from expensive West Coast markets, followed by some reversal in rental growth in 2022. However, the cumulative effect is that rents are becoming much higher than before the pandemic. 3-year growth in Phoenix, for example, is still a staggering 37%. Annual rental growth was highest in Cincinnati, Indianapolis, Louisville, Kansas City, and Boston, reflecting continued strong demand in affordable, mid-sized Midwest metro areas, and a delayed recovery for Boston. The beginning of a return to normal. Not only did monthly rental growth break its 4-month negative streak in February, it also climbed much closer to pre-pandemic average growth rates for this time of year. In each of the last 3 months, the monthly growth rate has been 25 to 30 basis points below the pre-pandemic average. Minus 0.41% in November, minus 0.26% in December, and minus 0.06% in January. But this February growth was just 13 basis points below the 0.43% this time of year average over the 5 years of data from 2016 to 2020. If monthly rental growth for the rest of the year is simply its pre-pandemic average growth rate in each month, the annual pace of growth would slow further, from 6.3% in February to a low of 3.0% in September. A normal year of rising rents would be a great relief for tenants. After last year's rapid pace of rent increases, year-on-year rental growth has already fallen sharply from a record high of 17.0% in February 2022. The slowdown in annual asking rent growth in February only reinforces the contrast with official inflation measures of rental growth, such as the consumer price, the primary residence rent component of the index, which increased by 8.6% in January. Previous research suggests a 12-month lag between annual ZORI growth and annual CPI rental growth, raising hopes that the latter's annual growth may be slowing sometime soon.